Why haven't markets reacted more negatively?
It's been an interesting year, hasn't it? That's a great question. And I think part of it is that the global economy is just more resilient than it used to be.
Welcome to another SWA Take 5. I'm Tendai. This is Jason. Jason, we're going to jump right in. If the financial markets feel confusing to most right now, they're not alone, right? From a geopolitical standpoint, gas prices rising, inflation fears, yet markets continue to move up. What are we missing here?
Well, Tim, that's a great question. And this is one of those moments where the headlines and the markets don't necessarily quite line up. The easiest way to think about this is right now, there are two big stories happening right now at the same time. And markets are kind of trying to balance both.
Gotcha. All right, so let's start with the good news then. What's a positive story coming out of this?
The positive story is really all about AI and the amount of money being poured into it. This isn't just a buzzword anymore. We've talked about it ad nauseum. There's a ton of real investment happening. We're talking massive spending on data centers. We're talking demand for semiconductor, even increased energy and infrastructure build out. And that's showing up in the economic numbers, strong earnings, solid economic growth, and certain sectors doing really well. So from the market's perspective, there's a real engine of growth here.
Okay, and so it's easy to think that this is just about the United States, but that's not correct, right? This is much bigger than that.
You know, it is global. You're seeing it show up in chip companies leading market performance, export growth tied to tech and AI hardware, even industries you wouldn't expect benefiting along the way. It's one of those rising tides lifts all boats type of situations, just concentrated a little bit in certain areas.
Okay, so global, positive story, that sounds all pretty strong, but what's the other side of the story here?
Sure. Zooming out a bit, because while that growth is real, there's also underlying pressure building in the economy. And we're seeing inflation tick higher again. Consumers having less cushion, savings are down. Wages are not quite keeping up with rising costs. And for a lot of households, things feel tighter than the market might suggest right now.
So this is one of those situations, things are good, but not everywhere.
That's a good way to put it. Some parts of the economy are doing well and other parts are feeling a bit more stretched. And that tension is important because it doesn't always show up immediately in the markets, but over time it can.
Let's talk about some geopolitical events that have been occurring. Why haven't markets reacted more negatively?
It's been an interesting year, hasn't it? That's a great question. And I think part of it is that the global economy is just more resilient than it used to be. We're less dependent on oil. Energy sources are more diversified. And markets are quick to price in worst case scenarios. Geopolitics still matters, but it's not the only thing driving markets right now.
Okay, so let's simplify this down a bit. And as an investor, what are some takeaways they should have from all of this?
Well, again, there are two forces at play, pretty strong forces: strong AI driven growth and steady real world inflation pressure. Both are real, and eventually they're going to have to meet in the middle. So the risk isn't necessarily what's happening today, it's what happens if growth starts to slow and inflation sticks around.
Excellent. So it sounds like our takeaway for folks is to, again, stay unemotional and stay focused on that long-term plan.
Exactly. You know, there is a lot of innovation going on. It's really exciting, but there's also real economic constraints underneath. So good investing is about balancing both.
Jason, always a great perspective, and you always do a great job of simplifying the complex topics into actionable takeaways. So if you have any additional questions, please reach out to myself, Jason, or anybody else here at the Saving Wealth Advisors team. Until next time.